In the realm of investment foresight, Tesla stands as a compelling contender to emerge as the largest company in the S&P 500 by 2030. Yet, this bullish outlook is not devoid of its fair share of risks, spanning from execution hurdles to market competition, macroeconomic shifts, and valuation uncertainties. Reflecting on past convictions, there's been a notable evolution in sentiment towards Tesla. After years of maintaining a bearish stance and categorically dismissing Tesla as a technology player, a perceptual shift has occurred. A pivotal moment surfaced with the publication of an article in May 2022 dissecting Tesla's valuation and highlighting concerns of overvaluation by 85.26%. The ensuing discourse, peppered with divergent opinions and spirited debates, underscored the polarizing nature of Tesla's trajectory. Fast forward to the present, and Tesla's narrative has begun to resonate in a different tone. What was once perceived as merely an automotive entity has now transcended its traditional confines, morphing into a multifaceted conglomerate with boundless potential.
So the Tesla team did an incredible job in 2023. We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we were producing vehicles at an annualized run rate of almost 2 million cars a year. This was really a phenomenal achievement. Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest out.
The aftermath of Tesla's Q4 earnings call, marred by skepticism and market jitters, saw shares recoiling by 12.13%. Drawing critique from analysts and investors alike. Navigating Tesla's stock price demands a keen eye for opportunity amid the tempest of short-term volatility. Leveraging capital derived from covered calls on alternate positions, a strategic pivot has been initiated, earmarking fresh investments into Tesla. While acknowledging the possibility of further downward spirals in Tesla's stock price, the long-term trajectory appears promising. We question the fairness of Tesla's valuation, surpassing that of tech giants like Meta platforms, which had significantly higher profits. However, as Tesla's stock declined, it shifted to a neutral position as the valuation became more reasonable. While we still have reservations about some aspects of the bullish argument, 4 key factors have prompted me to turn bullish on Tesla as a long-term investment. Despite expecting potential further sell-offs, acknowledge the unpredictability of market bottoms and plan to gradually build a position during this downturn. It's crucial to address the risks inherent in this investment thesis up front. Foremost among these is the necessity for flawless execution by CEO Elon Musk and the Tesla team. Notably, Tesla remains primarily an automotive company, with the automotive segment constituting a substantial portion of revenue and gross profit in 2023. The challenges in maintaining profit margins are highlighted, particularly due to several price reductions throughout 2023, resulting in a decline in gross profit margins. This strategy, if pursued further in 2024, could potentially lead to Tesla missing EPS estimates.
The sense of encapsulation, the unification of materials, the up level of premiumness.
Best Model 3 we've ever had.
We took out what I call like the baby fat out of the front end. Slimmer headlights, the puffy cheeks are gone, the full volume in the hood with the shoulders, the waist, really slippery silhouette. Felt like a refined athlete.
We really tried to improve the side impact of the vehicle by creating a stiffer and stronger door structure. We reinforced the hinges here, we reinforced the door latch and striker here, and then we added a catch here at the bottom of the door. And what we do here is we catch the door in 3 places to really resist that impact.
One of my favorite things about the rear end of the car is the taillights and how we were able to incorporate them into the deck lid. The lights are out wide, gives it a really wide stance and character. Now we don't have any split lines when the lights are lit. Diffuser's a little bit bigger. Really just cleans up all the lines and the character of the rear end, and the taillight goes with the tailgate.
We have a couple of exciting new colors. We call it ultra red, very high chroma. This is another new color, stealth gray.
As soon as you sit in the car and you close the door, you will immediately notice how quiet it is inside the car.
Moving into the sub-$25,000 market with Tesla's next-generation vehicle poses another significant risk. Despite introducing less expensive models, Tesla primarily sells premium vehicles, which may still be unaffordable for the average household. Failing to successfully bring a sub-$25,000 vehicle to the market could mean missing out on a substantial segment of the auto industry, impacting potential future growth. Tesla is also susceptible to macroeconomic factors beyond its control. Elon Musk acknowledged this on the conference call, pointing out that if interest rates don't decrease rapidly in 2024, it could affect not only profit margins, but also the affordability of Tesla vehicles for Americans. While there is demand for Tesla's products, the inability to fit the payment into the monthly budget due to higher interest rates could act as a deterrent, affecting Tesla's top and bottom line growth. Contrary to the wishes of Tesla bulls, not everyone is eager to drive an electric vehicle, EV, or a Tesla. The CEO, Elon Musk, being a polarizing figure, might influence some people to opt for a competitor's vehicle, especially if they hold negative views based on Musk's statements or other reasons. Personal preferences, brand loyalty, and the influence of a company's leadership can significantly impact consumer choices in the auto industry. Other risks involve the realization of the future bull case, especially those highlighted in ARK Invest's research. The monetization of full self-driving may not happen as soon as expected in 2024, and even if a fully functional version is ready, government regulations are necessary for its full utilization. Until it becomes legally permissible, widespread consumer adoption might be limited. If there are so many risks to this investment, why the bullish stance and the commitment to building a position? The risks are acknowledged, and there's an awareness that predicting the bottom or foreseeing every potential downturn is impossible. Going into this investment with open eyes, the perceived opportunity outweighs the risks in the current scenario. A potential decline in the investment's value doesn't equate to losing sleep. Instead, it's seen as an opportunity to acquire more shares at favorable prices. Comparing Tesla with the behemoths in the S&P 500, Apple, Microsoft, and Alphabet reveals the scale of the challenge. For Tesla to surpass Google as the third largest company, its market cap needs a 233.84% increase, equivalent to $1.34 billion. The financial metrics of Google dwarf Tesla's $297.13 billion in revenue, $166.76 billion in gross profit, and $66.73 billion in net income for the trailing 12 months. Tesla, for its 2023 fiscal year, posted $96.77 billion in revenue, $17.66 billion in gross profit, and $15 billion in net income. To be valued in the $2 trillion range, Tesla needs to achieve profitability akin to Google's current levels, a feat that might take 5-10 years. The bullish outlook centers around 4 pillars: Optimus Bot, full self-driving, ride-hailing, and the sub-$25,000 vehicle. Optimus, envisaged as a transformative product, could potentially replace numerous jobs over the next decade. From loading and unloading trucks for logistics, giants like FedEx and UPS, to household chores, the bot's versatility could make it an essential commodity. The integration of AI could further extend its utility, with applications in both blue and white-collar jobs. The household market, in particular, could witness mass adoption, driven by efficiency and the reduction of mundane tasks. For a monthly charge, coupled with a learning plan, the bot could become a recurring source of revenue for Tesla. With a 10-17% penetration rate across various markets, Tesla could potentially generate billions in annual revenue. The US is just the starting point, and as the bot enters global markets, the revenue potential becomes limitless. The upcoming segments that are catching attention are full self-driving, the $25K car, and ride-hailing. In 2023, about 1.19 million EVs were sold in the US. The idea is that FSD can be a direct-to-consumer play for Tesla and also a licensing play. If Tesla becomes the brains behind competitors' EVs through licensing, it could mean substantial recurring revenue. As FSD matures and hits the market, licensing agreements with major automakers like Volkswagen, Ford, and General Motors could bring in billions annually. Regarding robotaxis, the belief differs. The real value might not come from individuals opting into a robotaxi network, but rather from innovations like faster charging or the ability to take a nap while the car drives itself. The $25,000 car serves a dual purpose, breaking into the mass consumer market and creating a robotaxi fleet to compete with Uber. Tesla can utilize its in-house team, especially with the FSD network, without significant added expenses. In terms of financials, analysts project EPS of $4.75 in 2025, $5.65 in 2026, and $10.41 in 2030. The current stock valuation is high, trading at 43.77 times 2025 earnings and 36.81 times 2026 earnings. However, with potential advances in FSD and the bot over the next 7 years, the $10.41 EPS estimate might be conservative. Other factors like the charging network and energy business are considered, but their impact is seen as potentially smaller compared to the highlighted areas. The conclusion is a shift in perception. Tesla is viewed beyond just an automotive company. Despite uncertainties and a possible retracement of Tesla shares, a long-term position is being built. The goal is to hold it for the next decade, considering the combination of its automotive business, the bot, FSD, and a potential ride-hailing venture could position Tesla as a highly valuable company in the market. On the other hand, Tesla holds the second spot in the US for charging networks, boasting 33,000 locations, mostly featuring Level 3 chargers. This positions Tesla as a major player in the growing electric vehicle, EV, charging market. One potential revenue source for Tesla is its insurance venture, with estimates suggesting it could contribute up to 30% of the company's profits. Despite early hiccups like website crashes and reliance on vehicle data for safety scores, some predict Tesla's insurance business could generate around $250 billion in revenue. Tesla's engagement in the solar business, providing products like solar panels, solar roofs, string inverters, and batteries, is anticipated to see a global growth rate of 6.9% by 2029. Although Tesla's revenue growth has been impressive, averaging 120.5% annually, it has started to slow down. From 2021 to 2023, the annual growth rate was about 27%. Since the last article in Q2 2023, revenue increased by 2.12%. Operating income took a hit, dropping by 29.7% due to price cuts. However, net income surged by 23.1%, boosted by a tax benefit of around $5.75 billion in Q4 2023. The main challenge in the predictions is the chance that Tesla might not hit the expected sales numbers. Essentially, they're aiming to follow the footsteps of Toyota Motor Corporation. Given Tesla's avoiding bankruptcy several times, there's a reasonable level of confidence in their ability to cut prices while staying profitable. Another concern is Elon Musk's sometimes controversial behavior, leading to troubles in Europe, particularly with trade unions. This is a crucial market globally, and such tensions can pose a risk. Then there's the competition from Chinese car companies, which get substantial support from the government. Despite Tesla's recent stock dip, the rating remains a strong buy. The reduced stock price positions Tesla as undervalued, making it a good time to invest. Tesla's charging network, thriving in a market, along with promising ventures in insurance and solar, indicates potential revenue streams. Financially, Tesla boasts strong metrics, reducing debt, growing cash reserves, and increasing free cash flow. Tesla's commitment to price cuts and profitability aligns with their long-term vision of making electric vehicles accessible to all.